Good morning, ladies and gentlemen. Welcome back. As you can read by the title of today's YouTube stream, stock market is still positive, no breakdowns yet. Which really just means that the market is still in an uptrend within the kind of shorter term trading environment. Yes, sir, ladies and gentlemen, boys and girls. Yeah, I mean, I haven't really said anything, not a whole lot to say for this exact moment, other than, yeah, market's still positive. That being said, the VIX is kind of sending some warning signals today, so I don't know, we'll see. But yeah, we'll wait for maybe a few more people to get in there. I can't imagine a whole bunch of people are going to be showing up. But when we do get a few others in here, we'll kind of start rocking and rolling on some of these things. So if any of you guys watching have some questions in the meantime, feel free. Alrighty. Sorry about that. Yeah, so again, pretty straightforward, I guess, for the one person watching. Thank you. And this is really just for you this morning. See our little handy dandy magical yellow line? Check this out. So this morning, pre-market, right? Market. Actually, let's turn this into like a 10-minute chart. I know it's right on pay for that stuff. So there we go. So either way. So obviously yesterday, end of day yesterday, market continues up. After hours, pre-market opens, market tanks down to here. And now market is back into a long. So the question is, not the question, I mean, but ultimately, that yellow line, what is that? 50 SMA. Alright, so we delete this guy real quick, and we're going to change this to a regular trading hours chart, and we're going to go to the 30-minute, and we're going to take out the VWAP like so. Oh man, sorry. Alright, so we know what? We know as long as the market is above the 50 SMA, then the market is in an uptrend. Where is the 50 SMA price point located? The 50 SMA price point location is right here, the red line. So we're going to highlight that. Let's see what's going on this morning in the pre-market session when we wake up. We go into the extended hours, and we see that in the extended hours, the market's essentially manipulated or pulled back down to the 50 SMA. And we are bouncing it. So the market is not yet in a downtrend because we are still above. So this morning's pre-market low and pre-market pullback, all said and done, hindsight 2020, is really just a pullback down to the 50 SMA. To decide if the market wanted to essentially hold support or if we want to go into a breakdown. For the moment, market wants to hold support, so market bounces, right? And now we're going to play the waiting, not the waiting game. That's just it. I mean, market's just in an uptrend still. So we will not shift to, let me rephrase that. We're not going to shift into a full-blown bearish move unless we're below that SMA. And if we do go below that SMA, you can see how the pattern of the market would end up looking somewhat of a hold at head and shoulders, right? You go up to, there's your kind of head, and then if you roll below, then there'd be your breakdown right there. But we are not below, so we're still up. So anyways, pre-market low for today's trading session ends up being our 50 SMA. Very common to see something like that. Anyways, so going into today, we have oh, Steve, what's going on? Good morning. I thought I was gonna see the name of someone new, but just our usuals, as per usual. PD, that's because we care more about the price point of the 50 SMA from charts that don't have pre-market or after hours. No, Steve, you did not disappoint. I'm just, I'm just seeing, it's just funny, I'm just giggling at myself, really. I love that you guys keep tuning back in. It's really the only reason I even honestly do this. But yeah, PD trades. We what was I gonna say? Oh yeah, the 50 SMA. Basically, you want the 50 SMA price point from the regular trading hours chart, not the pre-market and after hours. That's just, yeah. So the best way to explain it would just be take two charts, one with pre-market data, one without, put a 50 SMA on them, and you'll see the difference in pricing. And then you will see that the 50 SMA from the 30-minute chart on the regular trading hours does a far better job at mapping off when markets are positive or negative, or kind of the swivel of the market. But anyways, it's just the price point of the regular trading hours chart is the 50 SMA calculation that we want. Now, most videos and most things on the internet will teach you to use pre-market charts. You have to see what's going on in the pre-market session, which to a degree is true. But you also want to use regular trading hours charts. Regular trading hours charts are far less talked about and far less taught amongst the internet. But also our kind of pullback destination for this morning is basically that box on the screen that I just drew. So we're going to, it's the same, guys, it's the same rules every single day. So, it doesn't really change in that regard. And when I say the target is this box, it's just we expect at some point or another we're probably going to see the price of the markets interact with those volume weighted average prices, okay? So yeah, that's an area of interest for us, 662.82s or something like that. So we'll keep tabs on that area. Yes. Now, side note, it's not that the 50 SMA on the pre-market charts doesn't have its own sort of system and what have you. But we focus on that regular trading hours chart is really what we do, and as do I would say just some more, as do people who really control markets, if you ask me. So, if you look at that regular trading hours chart, PD, and you map off where that 50 SMA is at, you'll pretty much see exactly why the markets in the pre-market bounce where they did today. That would just be the market not willing and not quite ready to break down. And when we say breakdown, that would just be, shorter term trend. So, take a second, map off where that regular trading hours 50 SMA is at, and then change your chart back to a pre-market, and then see where your pre-market bottom is today. Give or take a little bit, but... Come on, YouTube algo. But, yeah, so just kind of sitting, hanging out. We can bring down this little guy here. So another one here is the VIX. Obviously, this plays an important role. So kind of the reason why, well, markets do whatever they want for whatever reason sometimes. But, oh, this thing's not in focus. Let me bring it in focus. Kind of like that's good. That's fine. Anyways, here's the VIX on a 1 minute. But maybe I can bring this down. Maybe bring that up. I don't know. Whatever. Whatever. This thing's kind of goofy. Hold up. So then I go back to this guy. This is all weird. Maybe it was like that the whole time. Huh. Anyways. Alright. I'm trying to get this into freaking focus. There we go. So, yeah, if we look at the VIX this morning, it's positive. So this, again, we have this market situation where it's why is the market positive and the VIX is positive. So this is the situation where we pretty much look at the market and say to ourselves, if the VIX ends up sustaining its breakout, we will then look to sell the markets, even though they're in a buy move or positive. All right, so where is the positivity level for the VIX? It is 1622. So I'm just going to delete a few of these, and we're just going to make it 1 to keep it as simple as possible. So where did the market flip positive on the VIX? Over the yellow line, which obviously if you look at pre-market just ends up being pretty much where they start the gap. So over the yellow would be the 30-minute flipping positive. So now the VIX is in an uptrend from here. Now, since the breakout, the VIX has yet to back test the 30-minute breakout or the 30-minute trend. So far, we pretty much see this gap just fade out. All right. And pretty much that means the VIX now has a pullback target. Well, actually, it's a little different than that because I'm also looking at the 1 hour, which would be right here, but not too far off. It's only 9 cents more. So now that tells us that the VIX has a pullback target to here to back test the breakout. All right. So pretty much we have 2 scenarios here this morning. Either the VIX pretty much just for whatever reason does not back test its breakout and it just for whatever reason gets picked up and starts to go. And if so, we're going to sell the markets today because the VIX will be breaking out. Okay. Option number 2 is the VIX doesn't just break out and keep going, and it back tests its breakout, which would then do what? It would pull the market down probably to around those levels. At which point it can then decide if it wants to hold, bounce, and then continue into an uptrend, at which point we will sell the markets down. Because the VIX would be breaking out, back testing, and continuing into an uptrend. So we're basing a lot of today around the volatility index once again. Because the volatility index is potentially breaking out volatility. And then also, side note, how did, wait 1 second. I'm just removing all this randomness that I drew. And then, not that it really matters, but today's high a day on the VIX, right? So if you think about it, so when I see this high here on the VIX, to me, this high, pre-market high on the VIX, that was because the pre-market bottom on the market, right? So when the market hit its 50 SMA this morning, early pre-market, and bounced, that would be causing the top on the VIX, right? But anyways, so essentially we have this slight little breakout on the volatility index, and we're going to be using that to give us some bias on the markets, arguably, right? So while the VIX pulls back down to test its breakout levels, we are going to probably stay long bias the market, right? So if the VIX is pulling down to back test its breakout, we will remain long bias markets in the immediate, okay? That's generally how that works. So again, we do have a pullback level, which is the volume weighted average price. That is also our uptrend support level created from the pre-market session, which basically means we are long biased today's market as long as it stays above those volume weighted average prices. If we want to be bearish at any point, that can be a little pullback target. And then to add a layer of info on top of that, it is if the volatility index continues to pull back to its 30-minute and 1 hour SMA trend, it's going to be harder to pull the markets back while the VIX is going down. Got it? And then there's more to it than that, right? If we pull down the VIX to said levels and VIX end up bouncing and holding that uptrend, we may use that at that moment to sell the market down. So for the moment, the narrative is stock market is still positive. You are not fully bearish the stock market because the volatility index hasn't really quite signaled it yet. It might be trying, but it hasn't really quite signaled it. I mean, it in theory it has, but I don't really trust it just yet. Generally, if the VIX is breaking out and the market's positive, a lot of times it will pull back. But that kind of already happened this morning with the big dump. Now we need to see the VIX kind of either backtest, hold support, or just really start breaking out to give us that momentum down in the immediate. All right, so I hope that makes sense. It probably didn't make sense, but again, those are all like the very finite things you can watch. But the easiest way to always say it is what? Is if the market is above the 50 SMA, it's still bullish. If we go below, it's bearish, right? But all of that randomness I just talked about is how we navigate it even better in the real time, right? All of those different little scenarios can play out a million different ways. The bigger picture really is just the market is still in a bullish move. Now, the bullish move hasn't really been great the past few days, but that's irrelevant. It doesn't, the market is still in a positive, bullish environment, and it hasn't really flipped bearish. Now, we're looking at the VIX and the breakout on the VIX today and going, well, could that signal us to maybe be bearish before it's breaking down? Maybe, but it's still not quite there. So again, the simplest way to put it is market is still positive, only bearish if it goes below the yellow, but there can be instances where we see signals on the VIX that contradict etc. And we can use that to be ahead of the markets, right? So the VIX sometimes gives us signals that we can use in a way that allows us to be faster than the signals generated on just the SPY alone, okay? But that takes a little bit more practice, a little bit more screen real estate, watching more markets. Okay, so the easiest thing to do is for me just to come on the stream and say to you guys, hey, the macro market is still positive. You're not really bearish. Why? Because why? Because when we look at the SPX chart or we look at the SPY chart, we know what? We know that the market is still above the 50 SMA. So it's not bearish. Just like back here, market is above the 50 SMA. If it's below, it can be bearish. All right? That's how we view the market. I don't think the market is at a weekly +2 because I just looked at this the other day and I think it was at +1 and that was it. So unless I did something wrong, the market is at weekly +1 right now. So, and it is at +0.5 on the 6 month. And it's at basically +1 on the daily. So, yeah, that just means that the market is traded up. It's currently trading 1 standard deviation from the mean. The markets are not really on sale. They're more of an overbought, if you will. So again, it's, yeah, when things are on sale, let me actually bring that up real quick, right? So when things are, so watch this, ready? Watch this. So I'm going to highlight this area right there with this box. So that was the last market bottom. So the last market bottom that I was actually in, I remember I was in Arizona, visiting my parents' condo down there, and I was in the living room, and I was obviously watching the market, and I'm like, the market just hit -3, almost -4 on the weekly. I'm like, I'm going to add long, 3 times leverage UPRO, and made a really good trade out of it. And that was simply because I saw that the market had pretty much sold off into areas where I know it's very unlikely it goes lower. So honestly, I'm not gonna lie, I just max ported my Roth IRA on that one trade because I'm like, the probabilities are too high. So that was cool. But anyways, yeah, so all I'm getting at is that was the last time we were at -3, very low risk buying opportunity. When you find yourself in a oversold market, the reversals and the bounce backs are obviously going to be more aggressive, and then follow through on buy signals might be a little bit cooler. So obviously, if we take a look at the buy signal that we just had over the past couple days, right? So this is kind of what we're doing, right? This is our last buy signal so far, which was up, down, and then up, and then smacked all the way down today, and then a bounce, right? Like, that's what our last buy signal really looked like, okay? Now let's go back and see if we can get towards more like when the market bottomed back here, right? So this was when the market hit its low, right? So this thing reversed into a long here, big explosion, back test, up, right? Then eventually got its bottom in, and then here's your next long up, buy signal, quick breakdown, back to a long, and then, so not that the buy signals are necessarily better, but when you're coming from a more oversold area, there's better opportunity to get appreciation on the upside a little quicker and a little easier as the bounce backs come. Now, when you find yourself trading real high in the market, kind of like where we're at now, okay, you might run into situations where you start to see buy signals last not as long. The buy signals might kind of just be a little, choppier. So ultimately, as markets are getting ready, not saying they are now, but as markets do end up kind of slowing down and things get too high, you will see kind of choppier movement, or buy signals not have as good a follow through, because obviously clearly markets are trying to not go up, right? So that's something that we do think about. But yeah. But yeah, I mean, even still, yeah, when I look at +1 standard deviation on the market, I go, well, in theory, this is not a good time to be buying, right? As it relates to regression trend, because obviously being at -1 would be more on sale than +1, and so on and so forth. Oh, by the way, Bitcoin. So let's talk a little bit on Bitcoin. All right, so Bitcoin. I mean, yeah, I mean, awesome move. I'm actually really ecstatic that it went up like that. I'm very happy about that. But this is a great example of how, you can have levels, and not that the market doesn't go to them, but so right here we have daily VWAP support over under, aka sell target, right? Just because the market did not pull back from this daily VWAP zone here and then sell directly down to this daily VWAP zone, does it mean that this is wrong or it's not going to work? It just means that we're going to use this now at a later date and time, okay? It just wasn't used right away. So we're going to be using that later. And that's what I was actually talking a bit about yesterday too with my targets. A lot of them are volume weighted average prices. So it's less of the price target and more of the volume zone and when the price of the market enters it. So whether the price of the market entered our volume target here or it does it 3 weeks from now, the target will be achieved, if that makes sense, right? It's less of the price, more of when the price of markets enter the zone. That target and that sort of strategy kind of comes to fruition, if you will. So, 1 second. Let me see this. Let's do it like that and take this off. All right, so, but also another good, the flip side of that learning example, right, is we see the daily resistance VWAP over under, and we see what happens exactly once the market clears that. The market just jumps where? To the next boxes you see I have on the screen here, right? I'm not interested anything in between here because I know there's just probably nothing there. So the breakout goes from here to the next volume zones that I have. And you can start to see how you're starting that little hesitation. So real quick, if we map all of this off, right, here's one. All right, so on the way up, so this was the market on the way up for Bitcoin. On the way up, this was daily VWAP zone, right? So into it, and actually that's drawn a little, kind of a little incorrectly. It's actually, should pull this down. It's really like that. Okay, so that was a daily VWAP zone, all right? So this one, daily VWAP zone. Once it breaks out, what's it do? It just has it stretch to the next daily VWAP zone, which then gives it some resistance, where I'm like, you know what? We have a pullback target down to here, whether sooner, later, etc. We'll go there, unless obviously we break out the daily VWAP zone above. So then anyways, daily VWAP zone breakout. Then you see the breakout and the stretch to the next daily VWAP zone. And now this is where kind of a little hesitation is at. So when you kind of have the right zones, generally price moves to them, has some kind of trading, whether it's resistance or support, vice versa. And then once you break through that and trend to the next one, usually you find the stretch, right? Because everybody wants the stretch of the market. They don't want to deal with the consolidation. But the problem is most people, as far as trading and buying and selling goes, they see a market break out and they go, okay, it's time to buy, or things are going well. Well, generally that breakout and that stretch move happens quick and it just runs us to the next zone, right? So that's the hard part about necessarily like catching the breakout or always wanting that easy, fluent, long spot is the market doesn't last very long in the stretch. It lasts most of the time in kind of its consolidation and resistance spot, and the stretch happens very quick. So that's why it's harder to capitalize specifically on that part of the market when it's taking place. But anyways, so Bitcoin has essentially jumped up this morning into daily upper distribution levels that we use, and it's really just back testing weekly volume weighted average prices that we also use. So I will show that to you real quick. So one thing we're pretty much now following, which I follow for every single potential top of Bitcoin, which this is also what we use to perform the last lower high on the Bitcoin market. So obviously, if you guys watch the YouTube shorts on our channel, then you would know this, but we, over the past couple weeks, were looking to bottom Bitcoin here, and then we wanted to run Bitcoin up to about here, and then we wanted to lower Bitcoin starting about here, and then sell it down to pretty much all of this. And then this last week is kind of what we're working on now. So real quick, we'll talk about that. We're going to take a VWAP. We're going to anchor the all-time high. So I take a volume weighted average price for Bitcoin, and I'm going to go to the all-time high. And when I go to the all-time high, what does that give me? That gives me the volume weighted average price of the all-time high on the weekly, which becomes my weekly volume weighted lower high over under resistance. Okay? So, a couple weeks back, what happens? Well, actually, let me put a VWAP or a price level here. So, and there was more to it than this, but this is the simplified, dumbed down version. So what happens, right? So over the past couple weeks, the market on Bitcoin sells off. We track the volume weighted average price from the all-time high, and we pretty much say to ourselves, well, if this was going to be the top for Bitcoin and the market is going to go down, then obviously there's a good chance it would start a lower high and then it would go lower. Well, where would that lower high likely be at? A lot of times it can be around the weeklies, right? So what did I do? We go to the weekly. We track the volume weighted average price from the weekly. And then as the market is selling down, we say, hey guys, we have a counter target back to where? About 115 to 118,000. Why? Because that is the key VWAP of all of the people selling the Bitcoin market down from the all-time high. What more fun than to screw everyone over that was selling it short real quick? So what do? We bounce the market back, and then the market hits the weekly VWAP. And as the market transitions from one week to the next week, the Bitcoin market sells off from the weekly VWAP all the way down. What does it do? It backtracks daily volume weighted average prices created from the last low. And then we sell it down and backtrack the daily levels. All right? And now the market is bouncing up. So what's happening? As we said yesterday, now that the market is bouncing up, we're taking volume weighted average prices and we're putting them on this low. Okay, so I'll show you real quick. Putting them on this low. And at some point in the future, we can arguably use that for a higher low support. Okay, when's the last time we did this? We did it back here. When the market bottomed here, we said, hey guys, we're looking at a counter long bounce back to the volume weighted average price. And these are our daily volume weighted average price zones right there. And we're going to look to pull the market back to there. And if we can find support and build a higher low, then great. Well, this is kind of all weird looking, but anyways. So here you have it. So this would be market down, market bottoms on the daily. We pull back, we hold a higher low off of VWAP support, and then we rally the markets up to the weekly VWAP. We pull the market back on the weekly VWAP down, etc. All right, so now where are we? Well, where we are now is we're looking for markets to develop and or pull back into these VWAPs off the low. Now, when it's more of letting the market decide when that happens, all right? When it happens, that's fine, doesn't matter. We'll get there, all right? Kind of like this. So ready real quick. Here was a bearish move on Bitcoin. So check this out. So the last little, I can already see it here. We're going to go high, boom, like this. And then we're going to take this guy. We're going to leg it, all right? So look at this one here. So this would be the last daily high. And then couple days down, you see we anchor. And then what happens? Market retraces to, well, in this case, about the VWAPs right in there, and then stays down. All right, so it's the same thing. We repeat it over and over. So yes, that's that. And now where we're at with Bitcoin, like I was saying before, every single all-time high for Bitcoin, if they top out, they pretty much stay below the weekly volume weighted average price. So from the all-time high. So with that being said, We know that if the market on Bitcoin is not below the weekly all-time high, then kind of the bear market start isn't like in heat for the moment. So pretty much all this means is that this is top-down volume weighted average price. If when Bitcoin's going to go and enter a bear market, then likely is it's going to stay below its weekly all-time high and just stay down, right? Like it's done every single other market top cycle. Take you back here. So again, ready? Let's go to like here. Again, look at this market top. Right, we're gonna throw a VWAP on there, just like that. See this? That's exactly why we said watch counter long and back to bearish for like the past 2 weeks. So we basically put in a high on Bitcoin, saw it drop out, and go, all right, look for counter long back to VWAP, then be bearish at VWAP because this is going to be an all-time high and kind of the top of the market. This is sort of formation and patterning you can look for. Okay, morning, Brendan. And then we will then move this over to the actual market top, which is here. Okay, volume weighted average price here, and I like to do it on the breakdown candle. So you see here is kind of like one candle down, and then this big candle snaps the market. So for me, I would have tracked the all-time high volume weighted average price from the last Bitcoin market cycle top like that and said, hey guys, as long as the Bitcoin market is below the all-time high volume weighted average price, then you're obviously kind of like bearish the top. And anyways, here's your eventual retrace. Took a while into the volume weighted average prices here, and there's your rejection down. And yep, so that's that. So as we move into where we're at now with Bitcoin, what do we see? Well, we had a pretty, reputable pullback here off the high. Could arguably be the top of a market starting. So what do? We did exactly what we always do for the top. We track the volume of it and say to ourselves, well, if this is going to be a bear market at top, we're probably not going through that VWAP, right? So what are our two options? Go down, just forever, I guess. Not go down and go up, or maybe even back test and go down. So again, there's only there's only two options. Price can go up, price can go down, right? So if it's going to stay down, it stays down. And if it's going to stay down, it can stay down in two ways. Go down or back test, go down, right? So past couple weeks said, hey, VWAP, high, boom, back test it, then look for resistance, right? So we effectively predicted the Bitcoin move back to here, then predicted having resistance here, pulling the markets down to here, right? And then we predicted the bounce so far too. We predicted this bounce back to here. The only thing we've kind of been wrong about is that pullback level hasn't happened yet, which is down here, right? So now we're kind of watching this market in the immediate long back up with potential higher low development on the daily back somewhere right there, right? And it's October 1st, right? So we've just entered the month at which we expected we could start to see the Bitcoin markets topping out based off of previous cycles. So again, like I said before, if previous cycles repeat, we'd be expecting Bitcoin tops in October and November area, specifically October, but anywhere within this area. So I hope I'm wrong about that, but what's going on, SLL? Yep. So I hope that makes sense. All right, we're getting pretty close to, oh man, market open here. Let me get all my stuff situated. Thanks for the link today. No problems. No problems. No pruyams. Also, I changed over the streaming software setup, so probably not going to run into that issue we were running into yesterday about being on the wrong screens constantly. Oh, is the YouTube stream going to creep over the 30 mark today? I don't know. Are we going to hit that old resistance topper magooshner magooshner magee? What on that red screen, or what on that red screen? What on my screen, that box? What is that box highlighting, and what are we looking to do with that? Yeah, I mean, that's one way of looking at it. Yep, exactly, Petey. And same for SLL or SIL. I don't. Yep. Generally, that's an area where we looked for markets to pull back to, can be supported at, and then also kind of where stop outs for the pre-market traders can be at. But it's just generally kind of a magnetized area we like to work the markets towards. A lot of times into the open and throughout the morning. So, a lot of times as people from the pre-market get too excited, like in this instance, they're buying up the market, trying to get it to go higher than into the open. We just pull them back down and they all like, dang it. So, pretty straightforward there. Just volume, weighted average price. So, pulling back to there essentially would piss a lot of people off from the pre-market trading. Because again, we know that most people did not buy the absolute bottom here, which also is the 50 SMA. There's a lot of new people not new people, but just in general, a lot of newer watchers or viewers this morning. But I will, that just it makes me sound like I don't even know how to talk what I just did. But this down here is our 50 SMA. So this low pre-market was the 50 SMA trend. So today's pre-market sell-off was really a back test of our uptrend, and then obviously we supported it. So one thing's for certain is we know most people did not buy this low, and if they did, they haven't held all the way up. We know that most people probably bought somewhere up in the move, maybe into like this move, so therefore their volume weighted average price is around that box, right? So all we would have to do is pull the market down to here to pretty much shake out most people that were participating in the pre-market session. And again, that's because we know most people did not get long the low. And if they were buying long, they probably involved themselves somewhere along the move, but not the low. And then even if, they were still holding, etc., that volume weighted average price would be where we have the box. So pulling it back to there is kind of, just one of those things that why not, which we pretty much already did. You can also see I've increased our box a little bit, which makes our target down on that pull to pre-market over under VWAP kind of trend support. Not as far away, but it doesn't matter. It's just important low here, and then this established low I thought was decent this morning. So just basically making it like a dance. So we'll kind of zoom in there. And then you see the pattern of the market now. So watch this, ready? So you see how the market was long off the 50, then it goes up. You have this knee-jerk reaction down, and then it kind of grinds up and does this lower high, and now it's rolling down towards our VWAPs. if these break, you can see how like that's where support is, right? So support was created here earlier, blah blah blah, and just in general, if we were to go below this, you can see how that formation would kind of start to change. But this is still our over under pre-market support until it's below, right? But anyways, so we'll flip this back to 30. There we go, like that. All right. Oh, I need to pull up the VIX and keep close tabs on that today. All right, since the open, we are not seeing, well, again, it's 1 minute. It's like literally 1 minute. But so far, the first minute, the Mag 7 are not doing the greatest. But it's still a little early. It's hard to say. But Mag 7 aren't doing the greatest. SPY issues are okay. Doesn't mean that that's not gonna change. Again, there's not any dramatic selling right away, so markets are just kind of holding up, hanging out. Again, as you can see, we have not given up our pre-market VWAP support. So what does that mean? Momentum stays long in the immediate, as we've discussed already all morning, right? Well, a few times over the past couple days, right? So we have done what? We have pulled the market back to pre-market volume weighted average price, support, over, under. Obviously supported, hold, held. The market's not going to go down for the moment, obviously. All right. We look at the market internals, right? What are the market internals saying? The market internals are saying that the NASDAQ is advancing. The NASDAQ 100 are advancing. The S&P 500 issues are advancing. The NYSE issues, or New York Stock Exchange issues, are advancing. The volume of the market is advancing. The only thing that's so far a little lackluster over the past 3 minutes would be our FANG name, which aren't really selling off and not really going up. So they're more of like hesitation, if you will. So that's how the market is reading in real time. Number 3, what is the volatility index saying? The volatility index, as we discussed this morning, had broken up into an uptrend, and its back test levels were where? All the way down to the price of $16.30. So the VIX had one of really two options. It broke out, and as it sells off, it has, and it comes into the open, has pretty much one option or two options. It breaks out and just kind of goes, or it's going to back test. Try to, at least, down towards support, and that would be around that like 1620s area, right? So while the market is, sorry, let me bring this back over to the VIX. Well, no, you guys already got that. So that's pretty much, that. So while the VIX is pulling back, it's going to be hard to take the market down, right, etc. So what we're seeing right now is most likely the VIX trying to back test some of its levels, arguably as far as 1620s. I could see. So unless it just randomly gets supported here, we arguably might see the VIX down to about 1620, and that keeps the market in this long going until at least that. So, yeah. Now remember, guys, right? Is the market bullish or is it bearish? It's in a macro swing long, so we're not in a bearish market, right? Oh, thanks, Go Get It 9001. Appreciate you, Holmes. But yeah, again, it's just markets on the long side. I don't know how else to kind of put it. You know. Oh, that was one thing. For the few more of you guys that were just tuning in a little bit ago, I wanted to kind of emphasize this, right? So look at this. This is a pre-market chart, okay? Now let's go to a regular trading hours chart. So when we go to a regular trading hours chart, where's the 50 SMA? Right here, right? So you guys can see that. Where's the 50 SMA? It's priced at 661.59 or so. So let's highlight it. And now, where did the market trade to in the pre-market session? Right there. Again, this morning, pre-market, this was our 50 SMA tag. 50 SMA tag. So this morning, gonna be a bear market still. Government comes back. So that's the 50 SMA tag support this morning. So in the macro environment, we are not allowing the markets to sell off. And that's what happened this morning. We pulled the markets back, tested support, markets hold long, go long. We're still in an uptrend, and so on and so forth. So, yeah. Now, this morning, with the volatility index being up, that could very well kind of put some fear into the market and some people on edge, which myself included. I'm like, well, why is the VIX up like this? Is it just more of this government shutdown? Who knows what? People getting fearful? Probably. But so far, all said and done, market has not broken down. The VIX did break out, hasn't back tested support yet. So go get if you watch my stream more than a few times, one thing you'll hear me talk about quite often is I personally do not listen to a whole lot of news, nor do I let news really affect kind of like the decision making for me. So for example, government shutdown. That's a little bit in the back of my mind. Is it going to start a bear market? Probably not. Actually, I would almost say certainly not. Government shutdown, for me, would not be something that I would go like, oh, that's going to be the catalyst that takes the market down. That's not what I would personally think about. That being said, yes, I hardly listen to news. Because news is late, and again, a lot of people that write news don't even know what they're talking about. Just a couple days ago, we had a bunch of news articles coming out on the internet. It's like, oh, the market's getting crushed because nobody likes AI names anymore, right? And then 2 days later, guess what happens? The market bottoms and goes up, and now we're into a buy move. And the news is like, oh, all of a sudden, AI stocks recover and people aren't as scared about AI woes. So the news has zero clue what they're doing. They ultimately just flip their news bullish and bearish as the markets move bullish and bearish. So we just came from a bearish trading environment a couple days back, maybe last week. And now we flipped it more to a positive trading environment. And so now we expect the news articles to favor that direction, right? So algorithms and computers run the stock market from positive to negative territory in positive and bearish trading environments week in and week out. And as algorithms shift the markets from positive to negative, the headlines and the news systems also flip. Now, whether or not that's all just because people are following what the market does and they're reactive, which is probably the case, and it's the way that I would like to assume the market is, because that would make me have more confidence in our system as opposed to more of like an orchestrated system. So I would like to believe that again, people and news are just naive and they are just late to everything. So the only thing they know to write about is what they see in front of their face, which is the Dow rose a couple points today. AI did well, so it's got to be that, right? So they go and write an article, oh, everyone's buying AI, so that's why the market's up, right? or they see that the market gets smoked and the market is going down. And so clearly the only thing they know to write about is the markets are going down. Because why would I, as a journalist or someone who writes material, go on the internet and start writing stock market is super bullish, all this, when it's actually going down? Because what if I write that and the market doesn't end up bottoming or going up? Then I'm just going to look like an idiot. But I'll look less of an idiot if I just write what's going on right now, which are things are going down. So that's how the news operates. They're always late. They don't really, in my opinion, have a clue what's going on. They can only write based off of what their eyeballs perceive. So that being said, we look at when the market is getting ready to shift and when it's getting ready to change from positive to negative or bullish to bearish. And we know where and when that can happen. When we say where and when that can happen, not like entirely. We have the level. We know if we go above it. We know when the market gets accepted above it. News articles will change to positive, right? So a lot of times someone may go and look at the internet and they go and read something about Nvidia's stock because they're getting ready to buy it and they want to have confirmation bias, or they're trying to read something that will give them a comfortable feeling that they should be long this stock, right? Someone could go and do that, right? To look for bias on something. That's not generally what I would tend to do myself. But anyways, that being said, that's my full take on the market. Markets will move from bullish to bearish, and as they do, the headlines in the market will also change from bullish to bearish. So you can start predicting the news. And I know that sounds kind of crazy, but I've done it multiple times here, and the people here that are watching have seen me do that. Not word for word, but you can pretty much guess, right? If the stock market goes up a couple percent today, right, and you see it, you're like, well, all right, stocks are up a couple percent. Nvidia did well and Amazon did well. I guarantee later tonight, what's it going to go? Oh, stock market rises. And if there was CPI that day or PPI that day, stock market rises because CPI inflation numbers aren't as bad. Little did they know we just went into a buy signal. So it's like, yeah, we're going to try to take the markets long. But behind the scenes, there was CPI and people are going to write about it today. So if you really get comfortable with where the markets are going to shift from bullish to bearish, you can start basically assuming what news is going to be before they release it. That might have been a little more detail than you wanted to know, maybe, but that's it. So that being said, guys, remember that the stock market entered a bullish market, and our algorithms flipped from bearish to bullish on Friday, where I'm gonna highlight this box. So that box I put on the screen, just that box alone, not before it, right in it. That's where the markets flipped back to positive territory. Therefore, since the past couple days, what have you seen? You've seen market pop up, pull back, hold, pop up, pull back, hold, pop up. You're not getting the pullback and then the breakdown. Because why? Because the market is not bearish. The market is currently trend positive. Trend positive, you're more likely to see up, pull back, hold until eventually it breaks down. What do we have back here? We had up, pull back, hold, up, pull back, hold, up, pull back, hold. And then right here, we got the break below the 50 and then the break below the 50. And then what? We got the break down. All right. So anyways, the market is just basically trend positive, and we have no reasons yet to actually truly be big time bearish the markets. So another thing for you, go get I will map this off for you real quick. Alt V, vertical line. This is for everyone here too. And then Alt V, vertical line. So this box from here to here was our last selling operation. All right. And I'm going to delete that. So that box there was our last selling operation. And now this box from like here to currently here, everything in that's our buying operation. Let me change the color of this one to say green. Wait, that doesn't really do us much good. Yellow and green. Yellow and green's good. Yellow and blue. Yellow. All right, cool. So that's what that is. The red box on the left highlights the start and the finish of our previous selling program in the market. And when I say selling program, I literally mean short-term selling programs in the market. Like behind the scenes, computers are selling equities because the trend is starting to go negative. And then right at the start of the yellow, the trend starts to flip positive. So the computers are doing what? Buying equities long, buying dips long until the trend changes. The trend could have changed this morning if we started breaking down the 50 SMA, which you guys know where the 50 SMA is at. I'll point to it with an arrow like this. Right there, the low, pretty much the low of today's pre-market session was the 50. So we had the trend test this morning. That was the 50 SMA. If we started breaking down today and whatever and into tomorrow, then this box that I'm drawing now would have been the start settings. Change that to red. That would have been the start of a new sell move, but we supported it right today at the 50 SMA. So the trend is staying positive this morning from the pre-market low back test of support. I know that's a lot to take in. I would never expect a beginner to ever know any of this. You're not supposed to. Literally, you're not supposed to know it. You're supposed to be looking at bull flags. You're supposed to be looking for bear flags, head and shoulders, cup and handles. Okay? That's what you're supposed to be looking for. You know, yeah. You're supposed to be looking for the bull flag, the bullfrog. So that's pretty cool. But yeah, I guess really the more go-get of the thing I was actually really trying to get into that I kind of went off a little off track there was the news cycling. So we know that the red box was the last sell signal, yellow box is buy, so this would be sell signal / program. And then currently we would be on the buy signal, buy program. And actually I'm going to put this one on the bottom because it would make more sense. All right, and what else was I gonna do? Oh yeah, the news. So this is where you can expect the news cycle. 1 second. This would be news cycle start bearish. And then this would be news cycle flip positive. Give or take, you know, not every article is always positive or whatever, but the majority of it that's how it's going to be. So when we flip to a negative trend, algorithms go bearish, then the headlines of the market will start to change with that as well. And then same thing with when we go back to positive, the headlines of the markets will change with that as well. So that's that. All right. So now we're going to kind of get back into the 1 minute here. Kind of looks like, and I'm going to delete all that. I don't need this stuff anymore. It looks like we're seeing a little bearishness. Obviously, you can see, not you can't see, but the VIX is starting to kind of go up a little bit. You can see we pulled back. We didn't pull all the way back to our desired levels. Also, some things could have updated, but I don't think they really did. 30 minute. What about the 1 hour? The 1 hour is a little closer than it was. So right now we're kind of holding some support on the VIX over our trend, kind of as expected a little bit. So the market's obviously pulling back. I'm a little late to some of this stuff, but that's okay. All right, so now we're just rolling over. So now what we're going to do is we're going to anchor to the previous high here. I know we're kind of going over some other stuff there, but as you guys know, we talked about watching the VIX pull back towards 16. And if the VIX can support in the 16 areas above its trend support, then we're going to pull the markets back. So what we're doing right now is we are basically selling off the market after bouncing the VIX support at 16. We are now going to use anchored volume weighted average prices off the high. pretty much stay bearish on this entire move for the time being, as long as we are trading below the 1 minute volume weighted average price from this high. Okay. Again, I will repeat that the market is pretty much going to trade bearish down from that high since, well, yes, as long as it stays below 1 minute volume weighted average prices. Okay. 1 second. And then as far as, ooh, perfect, 161. We actually, wait, hold up. Yeah, we just actually hit one of the targets here. The QQQ just came into one of its pullback targets here. Doesn't really look like it's, well, we'll see. But anyways, I don't want to get people like jump the gun here. I just want to emphasize that the QQQ just pulled back into one of its 161 destination targets for the day. So there might be a little counter pop here as short sellers kind of take out or close out some of the profit as they're hitting that 161 destination there. Let me double check something else too. That would be, oh, it would be the same thing. Yeah. So right now our counter trend pullback / pop levels about there. So as long as the market stays below that, then the market can kind of lower high and stay down. But this is arguably a counter pop level. So unless, yeah, we'll just keep it at that. Unless it false bottoms here, and then we'll readjust and so on and so forth. You guys have seen this stuff a million times, so you guys already know. What about SPY? Did SPY have anything? SPY. Oh, it does. Nice. Didn't even see that. So let's see, because if that's the case, QQQ. SPY. All right, so again, SPY 161 target is on the downside with the full-fledged breakout with the VIX. Right now, our short-term counter trend pullback target's a little above that. And it kind of depends here, because if we establish a lower high in this area, we're going to make a new anchor spot. So we're going to have to anchor here, and then we're going to have to anchor here. And we'll see if that ends up playing or not. But yeah, so I would say kind of a lot of the important takeaway here today too is this. So this is remember, this is what it's from the pre-market session. You can see it. We already talked about all this, right? What do we say? Well, this is good enough. We talked about the VIX and it's pulling back, right? So the VIX is pulling back this morning down to its breakout level, which is around like 1620s and blah, blah, blah. And if it holds support and bounces, that's where we pull the market back. All right, so we've kind of done a little bit of that. But anyways. All right, again, we are probably taking our market back up to our counter trend 1 minute target. What is that? That's the one above. As you can see, we're about to complete, pretty much completed. So there's your counter trend 1 minute retrace target complete. You see that? Bounce back 1 minute. Now this is where the 1 minute market gets its opportunity to stay down. So we'll see if that ends up coming into fruition. So this is, again, ideally where the 1 minute market would need to lower high, or else we'll start stopping out traders that sold this leg down. Oh, come on, YouTube algo. Don't stop us at 20 this morning, Bob. Keep her pumping. Oh yeah, let me also say that too. I messed something up. So, this is only going to be achievable also with Again, guys, we still haven't actually hit the VWAPs from the top down area, but you know, well, actually, I can actually see we probably really should be anchored to this one because it actually broke structure, but that's okay. So we'll change this zone from like there to there. That's probably more appropriate. All right, so our micro trend target is now complete. Ding, 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 ding. How did we possibly know the market would bounce back to that area with pretty good likelihood? Because it's the volume weighted average price from the high. So anyone who chases this market down, their stop out and pain is right there. So what do? Ram them back. Ding, ding, ding. Now we're going to go up to the 5-minute, as we did yesterday a bunch of times, most likely. So 5-minute volume weighted average price, a little bit higher right there. So that's our next target on this bounce up is the 5-minute. Why? Because we took out the 1-minute. So when we take out the 1-minute trend, as you see here, a lot of times they squeeze up towards 5-minute. And that will be the completion of our little short-term counter bounce trade idea and analysis for you guys. Exactly, Mehdi, because CNBC told us that the market would bounce there. It was CNBC who said, hey guys, don't be shorting this low because it's probably going to counter bounce back to the 1-minute or the 5. That's right, we learned that from CNBC, not from the Boiler Room Network. YouTube, don't hit us with that algo resistance at 20 viewers. Keep it pumping, YouTube. YouTube. Anywho, hope you guys caught a piece of that bounce. That was pretty nice. That was pretty good. Speaking of, we need to take the 30-minute into account here because we know that unless the 30-minute breaks down, we're not going to really see any big sell-off on this kind of intraday stuff, which we're probably still above that, yeah. So we're still trading above 30-minute volume weighted average price today, which again is today's pretty much low right there. So, and it's also QQQ 161. So let me put it this way. If whatever the market wants to break down today, QQQ wants to break down and the VIX wants to continue trending out, this would be a downside target when the lows and everything get taken out. Okay. Oh, sorry, I wasn't, not that, you know. But again, we finished those targets for the retrace there, so we're no longer interested in that. Now we're looking at the volume weighted average price up off the low. So obviously the retrace level from there would be to, I know I'm a little late, but you guys just know it's right there. Again, this box I'm drawing, that's the retrace. Why? because that's the volume weighted average price from the most recent established low. So now we're pulling it back down. We just screwed over everyone who bought that last dip. They're all stopped out because why? That's what we do. Thank you, CNBC. And now we anchor to this high and we basically say, this is the short term over under now. Doing, doing, doing. Oh, come on. There you go. There you go. All right. So like that. So now the counter level on the top is right there. And essentially we're looking for, it doesn't, I'm just in general, right? There's only so much that can go on right now. The volatility index is still holding up okay. 1 minute MAC still positive. 5 minute MAC just now getting positive. Still below the zero line. Basically, the MACD would have to flip positive on the VIX over the zero line to keep that long press going on the VIX in order for us to break the market down. So we're still a little early on that. All right, counter pop back to 1 minute micro target on the upside is done. That's complete. Finito. Bing, bang, boom. All done. Now I'm going to let the market figure itself out because now the market is compressed in between the bottom and it's compressed in between this top. And now I just got to let whoever wants to stop themselves out here, stop themselves out, and then we can start picking new kind of little mini trade ideas from there. So that would be, there's a few targets completed for you guys. I mean, we did suggest, right, the pullback target for the pre-market to about there, then to watch for support over under. Boom. Didn't predict this top, was too busy teaching. Then mentioned that the sell target for QQQ was hit here, so there'd be a little bounce. Gave you the targets of that bounce, and then where the pullback of that would be, and then where the bounce of that would be. So that is 1, 2, 3, 4, 5, 6. 6 trade ideas on the day that have, for the most part, hit correctly. We appreciate you, CNBC. We appreciate you. Not bad. That's pretty good. And I remember the days where I couldn't do that at all. So I'm very, very happy that over the past 10 years I've been able to learn enough stuff that in real time we're able to see a lot of those moves. And just understand it. You know, that's pretty much it. So I've put a lot of time and effort into learning a lot of this random stuff. The YouTube algo. Yeah, so you can just see it, right? So if you take, right, watch this. So take this high here, take this low, right? And then take, or wait, that's my apology. Never mind. Well, I guess so. But it's just this. This is how the market's compressed right now. From everyone that bought this last low and then everyone who shorted this last little top, they're basically compressed in between the volume weighted average price in the high and the volume weighted average price in the low. So now it's about basically breaking out the upside or the low side, but obviously it looks like we're going to take out the high side here based off the way the VIX is looking, but we'll see. And now, like, that's what I'm waiting for now, is I'm waiting for something to take place now, whether it be a breakout of here or if the market broke down is kind of irrelevant to me, because then I can start re-anchoring and making new ideas. See, like right here, the market was flowing up, so I could anchor VWAPs here. The market was flowing down, I could anchor VWAPs here. Market flew up, so I can anchor VWAPs here. Then the market kind of pulled back and do that. And now we have this really tight room where there's kind of no value of using those volume weighted average prices anymore because the market's so compressed. It's so tight now that it's like, you know, we need the market to kind of move again so we can start tracking volume of those trends. But again, guys, you guys know that the market is in a macro long. We are not swing bearish. We are not extreme bearish. And we were only bearish this market for the time being until what? Till QQQ 161 was hit, or if you hit the SPY 161, and or as long as the market maintains below the 1 and or 5-minute volume weighted average price from the high. So think about that. Remember like 15 minutes ago. I'm going to delete. I don't want to do that. But remember about like 15 minutes ago or so, we said, hey guys, as long as the market maintains below the 1 minute and it's the 5-minute, but then you can stay bearish, right? So as long as the market maintains below what? The 1 and the 5-minute VWAP, which would be here to about there. 1 second. Yeah, well, there to there. That's correct. Okay. Oh, TradingView. Don't be lame now. TradingView's lagging. It's paused. There it goes. So, okay, yeah. Basically, 15 minutes ago, we said what? Hey, guys, we're going to sell the market down, and we can stay bearish as long as the market maintains below the 1 5-minute volume weighted average price from the high. So, market goes down. We bounce the market back to the 1 and the 5-minute volume weighted average price from the high, and then we lower high it and fail to make a new low and higher low. And where does the high... So, think about that. We create the lower high off the volume weighted average price from the previous high. We then pull it back down to where? The volume weighted average price from the previous low. And that's where the higher low gets supported. So the same way we use VWAPs off the high to make this lower high is the same way we created this higher low with the VWAPs off that low, right? And that is essentially how a lot of times we may create this market where the market is ping-ponging back and forth through levels. And people are trying to buy breakouts and all this, and they just get sauced and tossed like a Caesar salad. Oh, snap. Bitcoin up to 117. Lego. You know that I love when Bitcoin goes higher. I will be extremely happy if I'm entirely wrong about Bitcoin cycle topping in this area, which I kind of hope I'm wrong, but, you know, we'll see. You're starting to get closer and closer. Let me actually look at that again. So that is that correct? Yeah, that's about that. Yeah, so that pretty much what I've highlighted there as far as Bitcoin goes, that was essentially our analysis for the length of our bull market. We figured it would be from here to here. Well, let me rephrase that. Not that. We figured our Bitcoin bull market would last from, again, the start of this red box to the end of that red box. This box has nothing to do with price appreciation. It has all to do with time. Right? So we assumed as the market gets into, this would be October 13th. Wait. No way. Well, it'd be Friday the 13th, but Monday the 13th. If cycles, in my opinion, were going to repeat almost exactly the same, then we'd be topping Monday, October 13th. Guess what? That's probably not going to happen because markets normally don't do exactly as they've done in the past. They may rhyme, they may be similar, or completely change altogether. But anyways, our expectation is that as we get into October, maybe even like anywhere from September, October, November, we would start to slow down on the Bitcoin bull market. So we'll see. Again, I don't know. We'll see. This is all on the premise that cycles would continue to repeat. Now things are more institutionalized, right? You have ETFs, you have all these other stuff, right? So Bitcoin market, in a sense, is normalizing. It's becoming more mainstream. So does that mainstream adoption prevent cycle repetition? Maybe. Does adoption institutionalizing of the asset make the cycles repeat, but in a different way or not as volatile, right? So do we still have the 4-year cycles, but the drawdowns aren't as aggressive and maybe the explosive moves aren't as aggressive? That would make sense. So far this cycle, we are seeing differences. So that's another thing, is so far this cycle is not acting as it's had in past cycles. How do I know that? Because every past cycle has traded at least to +3, +4 standard deviation on its kind of bullish run. This cycle, the highest we got was +2. So the volatility increase in terms of explosiveness to the upside during the bullish cycle has already slowed down. So we've seen a decrease in volatility, or that's really just it. How fast volatility or the growth of the asset takes off during the bullish cycle has already changed from the last one to this one. And that is based off of standard deviation, regression, volatility analysis, blah, 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 blah. That's already a change that I've noticed. So if the volatility has slowed on the upside from the past bull market to this bull market, we can safely say that there's at least some evidence that there is some change taking place from past to present. Does that same degree of change also trickle into the cycle analysis, which would be, however your 4-year cycle's up and then coupled down, etc. So we've seen a change in volatility for Bitcoin. Do we see a change in cycle analysis now? And or the degree at which, how far the pullbacks are in, say, bearish environments, so on and so forth. So there is some evidence that changes are taking place from cycle to cycle. But that being said, my analysis always pointed to Monday, October 13th as a top, if we're to be pinpoint perfect, which I don't expect to be. But also being on the long side of Bitcoin for, at this point, it's been 1,057 days. And that's not entirely true, because I didn't buy 1,057 days ago at the exact bottom. But the analysis points to me using that as a whatever. So I'm using whatever that day as a bottom, and it points to 1,057 days. And so we are very much nearing that. That would be another, it's 13 days, including today. We have 13 days left on this bull market, in theory. So that's where I expected things would slow down and growth would slow, unless somehow cycles are changing and what we've seen in the past is no longer going to work going into the future, which is completely okay if that's the case. It just is what it is. But yeah. Cheers. Alrighty. Again, there's not a whole lot to say. Awania say there, folks. That would be sick if we go up and get Q. That one's performing kind of yikes or my goo. Yeah, anyways, so that's that. And again, just to get everyone up to speed on the narrative for right now, the narrative is the market is in a macro bullish environment. So if you're swing short, you're more likely to lose, because we're not in a swing bearish environment. We're more of a swing bullish environment than anything. And it will be that way until the market goes into a downtrend, really. Like this morning, we had the VIX up. The VIX did break out some volatility. We did back test levels to be long the volatility market, which is how we pulled the market down today, arguably. But the VIX, here's another thing that we're watching for too on the VIX. This is going to be a catalyst for the market to kind of boost itself up. So this is what we're watching for the long to get, hopefully pick up in more momentum, is if the market breaks down. So look at the VIX here. We have this level here, and then we got this level here. This is where the VIX is going to try to pull back to, most likely, again. We did it earlier this morning and bounced, and so we're most likely looking to take the VIX down to here. Again, to the yellow lines. Again, we pulled back earlier, shied it, bounced, so we kind of pulled back, bounced. Now pulling back again. Obviously, if this low gets taken out, then VIX is going to sell down to there. So that's pretty much our pullback target for now on the VIX. And obviously, if that's correct, then the market's going to keep going up. But it's ultimately, if the VIX can break this down, then we'll be far more ecstatic about the long bias opportunity or long bias momentum of the market, because that would be volatility receding, or subsiding, if you will, or going away. So we have a situation where volatility is currently on the positive side of trend. It's not moving very bullish though. So it's just a situation. Volatility is on the upside. If we can get volatility to break down, that will be a catalyst to take the markets long, right? And when I say take the markets long, I mean if computers in the stock market read that volatility is now entering a downtrend, then that would literally in their program would be a reason to start being more bullish the market. You as a retail trader may not see it that way, but that is in fact behind the scenes and in computers what is being talked about. Computers are literally saying volatility index, volatility just entered downtrend, volatility is starting to recede. If fear is no longer in the market, then I am more what? I am more optimistic of the market, aka bullish. So there are situations like today that could present a scenario where the VIX ends up going into a downtrend, and even though the market's already been doing this bounce and the market's been going long for the past 20 minutes, if the VIX starts to break down, so that's another thing. Even if the market's been running for an hour on the upside, and you're going, should I buy it? Is it time to buy? Is it going to pull back? And then the VIX breaks down, the market won't pull back. If the VIX breaks down, it's just going to boost up into a long from there, because that would be a catalyst to re-long the markets, right? You could be bullish the stock market because it's in an uptrend, but then you can also be newly bullish the market when the VIX breaks down, right? So if uptrend starts on market and the uptrend's been going for 3 days, but then all of a sudden there's a signal that the VIX just broke down, that would be another catalyst, right? That would be like the stock market starting a new uptrend in the uptrend it's already in. It's just its co-parent or its co-partner started the signal, right? So anyways, I'm kind of leaning towards this VIX going down to that 1630s. But again, it's all on the premise that low of day gets taken out. So again, my target on this VIX right now, it's going to be down to 1630, stay long the market, as long as that VIX breaks down that low of day. If it doesn't, again, I could really care less. Again, this is all very short-term analysis stuff. Sometimes you're going to be right, sometimes you're going to be wrong. I would like to think that I'm right far more than I'm wrong. Well, I know that I am, but there's the occasional mishap. Easy. When's the market gonna go down? When are we gonna short the market? Easy peasy lemon squeezy. Again, all I gotta say is we're gonna stay long the old markies here in general. Why? Because the markets are in what? They're in a buying program. They're in a buy signal. We are not swing bearish. We are in a macro swing long environment. We've discussed this since Friday, Well, that's not true because I got off before the buy signal. But the buy signal started at the end of the day Friday. Monday, we came in and said, hey, guys, just to let you know, market is swing macro long bias. Granted, the market hasn't pumped since then, but we haven't broken down. All we've done is pull back. We've pulled back in a bullish market environment. We opened at it. Yes, we are going to pump it like Arnold. Arnold is going to pump you so hard. It would be cool. I don't think that's going to happen today, though. That would just be pretty cray. I mean, it could. Nah. The old GP Magoo. Oh, come on, YouTube. Let it pump, brother. Let it pump. Alright, so anyways, I think we're all up to speed there on the VIX and blah, blah, blah. So now we're going to go and we're going to go into the market. Oh my gosh, look at the old pumper Magoo on the market. I mean, oh my lordy, lord. Again, guys, you got to stay long the juice. I mean, I know we talked about being, a little bearish here, but again, that's all short-term stuff. I wish, that's why I always try to come into stream and give you guys the macro environment so that we don't get too carried away with things, right? So even though we were kind of like momentum bearish here, it's still a macro long environment, and that hasn't changed, right? And so that's another thing people struggle with is knowing, macro versus short term. What is the trend that you're in, Government, yeah. I have no idea, Easy. Yeah. So, yeah, anyways, this one's a little, the trend is so strong right now on that upswing that anchoring is not going to work very well right now. This is exactly what we talked about yesterday. When algorithms start to kind of force stuff or just push stuff, sometimes anchoring can get a little bit more difficult. But right now, we're probably looking at an anchor spot there. And see, there's even this candle here. Shorts got squeezed out of that one. But, yeah, I would say it's just, like I said, I don't like anchoring as much when it's like this because it just seems dumb because the algos are forcing. But currently, our first pullback target's here. When I say first pullback target, it's just your expected high-frequency pullback area. So that's going to be our first one, which is basically going to happen right now. And then we have, see, that's all jank. That's a breakout there. I just don't like it when it's like this. That means we go to there now. And then you're going to have there, and then you're gonna have another one here. Yeah, so these are kind of a bunch of volume weighted average prices that are untested that I'm kind of thinking about. Granted, the market I can already see is kind of doing that force stuff. We'll see, but at the end of the day, right? So let's bring down the VIX, and actually I'm gonna shrink this over. All right, it's kind of like that. So like I said before, our target on the VIX is down to 1630. If we break this low and just go down, then obviously we're not going to see, these little pullback destinations on the SPY. If the VIX obviously double bottom, bounce, hold, whatever, does that, then we'd be more likely to pull this market down into some of these targets real quick. But ultimately, we would still like to see the VIX down to that 1630s because why not? You know. So in my opinion here, it's like, does the VIX want 1630 more than the SPY wants the volume weighted average prices that it's just created, right? If the SPY wants the volume weighted average prices more, then we pull them back. Granted, that would also fall in line with what? With market internals. What do the market internals say? So right now, the market internals are kind of, actually, it looks like they're pulling back a little bit, but the FANG are going up. So this is a situation where, again, you just look and you try to get your best gauge on it. What are you seeing? Well, NASDAQ 100 and NASDAQ are like kind of red. The FANG are kind of green. New York Stock Exchange issues kind of red, and S&P issues kind of red. So majority of the markets are kind of meh, but the FANG are doing okay. When the FANG are doing okay, you have to be very careful because the FANG normally control the market. There are days where even if our big name stocks like Apple and Facebook and Meta and whatever are doing good, we can still sell the markets off. But there has to be a lot of market participation bearish from lots of equities. So if you ever see a day where the FANG, Apple, Microsoft, Tesla, Amazon, all those stocks, right? If those are performing really well, but the market is still going down, that tells you that there's so many underlying stocks in the market that are performing bad that even with those big guys going up, they're still not strong enough to hold the market. That's normally not the case, though, because they have such a big market cap, they play such a big role, that generally, if they're going up, the markets are going to go up, or they're going to stay up. So in this moment, what did we see? We see that the NYSE, the NASDAQ 100, SPY, NYSE are all kind of like, but the FANG here are still kind of holding up okay. And what I mean by that was the last 1 minute was green. That was it, right? So it's like we don't have consecutive reds. We don't have any big red pulling back right now. And since we don't, there's a good chance that we're just not going to sell the markets down. Because the pattern, well, that's not entirely true. But it's the stocks in the stock market make up the price and the price action of your markets. Yes, there's Fibonacci and there's volume weighted average price, and there's ways that we like to try to move the markets to and from different price points. But ultimately, it's the performance of the equities in your stock market that end up making the pattern of your ETF, SPY, QQQ, etc. All right. So, yeah, that's that. All right, guys, we are still creeping down on the volatility index, or magoosh, or magoosh, or mageesh, or magee. I know that probably makes 0 sense, so I'll try to refrain from making too silly of jokes. I hope you guys are enjoying your day with me. I really appreciate you guys tuning in. I hope you guys are having fun. I hope this is making sense. I hope this is a very clear, understandable YouTube stream for the financial markets. I hope we make things clear. I hope you understand it. I hope when you tune in here, you go, wow, this is awesome stuff. This is cool. The market's kind of making sense. I'm kind of making sense of why things go up, why they go down. So I don't have to go and try to read news articles on the internet to piece things together, right? That's the job here, is to provide an accurate, fun, loving YouTube stream. Cheers. All right, VIX is starting to slip through the low of day. Does that mean that the market's just going to tank on the VIX? Probably not. Does that mean that the market is going to go lower? I don't know. Does it mean the market can go lower? Sure. Does it mean it could go higher? Sure. Don't know. But all we know is that we got targets down to 1630. And if the VIX wants to play nice, take out low a day and go there, fantastic. If it doesn't want to do that, wants to bounce up and do something else, fantastic. Again, you don't control it. You just look at where the trends are at and hope things move as fluently as possible to and from your levels. Also, right now, what we're doing on the SPY is we're just pulling back to the volume weighted average price. Ready? See. Ready? We're going to add. Oh, there it is. So again, we just took what? The last lower high slash higher low. Well, not lower high, but last higher low on the SPY. Threw the volume weighted average price on it. And where the market pulled back to? Right there. It just so happens that the 10 SMA happens to be there. So someone could be like, oh, that's just a 10 SMA tag. It's like, well, true. But it's really just previous higher low, VWAP, pullback, VWAP. Try to create 1 minute higher low. That's what high frequency computer tradings do. All right, well, no, never mind. I was going to say we started to see something good on the NASDAQ there. But the SPY issues and the FANG issues currently are printing kind of sideways flat. So kind of slowing there maybe on some momentum, but it just depends. Again, it's like, actually, let's see. I mean, MAC's not even red yet. Go back, check deal. Where'd the VIX go? Where'd the VIX go? There it is. Bitcoin. SPX. What are rates looking like? What are our rates looking like? Ooh, even down. Are we almost creeping into the threes? No. Oh, no, we're not. No. I was going to say, man, if we could, that would be cool. Seeing the rates down back in them trees. Got so many lenders calling me trying to get me to refinance a house and all this, and I'm just like, it just doesn't make sense. It's like I wish it made sense, it just doesn't. And the annoying thing about refinancing too, it's like, oh, we're gonna add on we're gonna add on more debt when you refinance. It's like, how about you just refinance my original debt at the new rates? It's like, we don't really need title insurance because I already own the house, you know what I'm saying? So again, it's just one of those systems. It's just, nah, you know, very schemy. Very schemy. But then again, all industries have their scheminess to them. So just kind of is what it is. It's just we just live in an impure world at the end of the day. That's all it comes down to. Okay, ladies and gentlemen, boys and girls. Hello, 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 everyone. Hello. It's 10:33 on what is today, Thursday or is it Wednesday? I keep forgetting. I'm getting my days so mixed up. Damn, it's only Wednesday. Yeah, I mean, like I said, when I bought the house I'm living in right now, I bought it like at peak interest rate numbers. That being said, it's not like I didn't know what I was doing, and it's not like I didn't plan for it. It was just there was a house in our neighborhood that I really wanted, and I was not going to let somebody else come and buy it from up under me. So what did I do? I just went and bought the damn thing at a 7.8% interest rate. Does a 7.8% interest rate suck? Yes, but we had no intentions of paying our mortgage off on the 30-year mortgage timeline. So we've taken our 30-year mortgage, what was like 2.5 years ago. Our payoff timeline is now 10 years. So if we stayed paying the minimum payment right now, we'd now pay it off in 10 years. And we've only owned the house for 2-ish. So there was never the plan to pay 7.8% interest on our loan over the course of 30 years. So the interest rate that I was getting, though high, was never something we really intended to actually go toe-to-toe with in the ring for that extended period of time. So didn't really mind going at 7.8. And I knew that rates would probably come down a little bit, so in the future I could refinance. That opportunity is starting to come around, the refinancing. But since we've already paid off so much so quickly, even refinancing doesn't make sense because it doesn't save me any money. So I firsthand have experienced a situation where, as dumb as it sounds, which is really the case for anything, is as long as you have the money and you can afford something, go for it kind of thing. Because regardless of it being 7.8, if you take a loan and you just pay it all off, it doesn't really matter, right? Not saying I'm doing that or could do that, but just in general, I had originally thought like, oh, interest rates will go down, I can just refinance if I want to, blah, 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 blah. I never really thought that I'd run into the situation where I paid the house off so quickly, and then with interest rates dropping, that I'm still ahead, even with 7.8% interest, versus getting a new loan at 6 or like 5.5, which they're not even. They try to take me from a 7.8 down to a 6 with like 800 credit score, and I'm like, bruh, like, get out of here. The 10 years at almost 3.9 now, or like, how about you just go in the back room and suck on a chubby or something? Not really, that's mean. I don't actually mean that. I gotta take that back. Don't go in the back room and suck a chubby. Go in the back room and ask for forgiveness. I repent for that sin, Lord. Sorry. Anyways, that being said, so yeah, that was kind of an interesting situation I ran into. So I did just go through all that. I'm like, should I refinance? Should I look at this? And blah, blah, blah. But it just makes no sense. But the people that I'm dealing with keep calling because they don't realize that's the situation. Then we sit down and we look at the numbers like, oh yeah, actually, yeah, you are right. It really doesn't make sense to refinance. I'm like, yeah, no shit. So stop trying to call me and scheme me out of some monies. Yeah, so that's that. And, oh my goodness, look at the volatility index. Look at her, boys and girls. She just hit $16.34 for Magoos. What was the target? 1931. Or wait, 1631. So we've missed that target so far by about 2 cents. Wait, maybe 3 cents. Wait, 1634 and 3 cents so far. And it's also down to 1622. So as we come into this level, we are no longer bearish the VIX for the moment. We're kind of hesitant. Might see a little bit of a counter pop. So as the VIX sells down into 1630s, 1620s, we are now no longer immediate momentum bullish the market. Why? Because the VIX is kind of coming down into those targets. Now, could the markets continue going higher in the immediate and blah, 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 yada, yada? Yes, probably, and sure, they probably do. But as far as short-term analysis goes, we have done what? We have sold the VIX down pretty much to our desired sell targets. So now we're going to need the VIX to go to our target a little bit more and then just break down in order for the markets to just keep going, right? So do we here think on the Boiler Room Network, do we think that the markets are just going to go into here and then just break down? Or are they going to come into here and bounce or hesitate and slow down?
My assumption would always be first, when your sell target is met, don't think it just keeps going. Think it's going to either bounce, reset a what? Lower high. So I'm going to assume that the VIX is going to A, keep selling down into our desired targets as suggested, but ultimately it's going to start to kind of slow down and hesitate here. So I am less long bias the high of this market because the VIX has now made it to our target. And we're also at the 100 Fibonacci of today's S&P and levels and whatever, but that's just more stuff that you guys don't really need to know. So, yeah, what does that mean? That means we're going to pull the market down to the VWAP I'm about to put on the screen. It already did it, probably. Yep, see how that happened? You see where our last higher low was in the market, and then you add a VWAP to it, and where's your pullback? Right there. So, again, that's how we go on CNBC every day and tell the viewers where things are going to pull back to. Just like that. Bang, bang, boom. Little chicken wing. Little chicken wingy dingy. Why is the market pulling back? I don't even understand, guys. I just don't get it sometimes. Also, the next VWAP we're looking at would be right here, which I'll move it to right there. So now we're pulling back down, and we're achieving the volume-weighted average price pullback targets. Why are we doing that? We're doing that because the volatility index did what? Sold down into our targets. If the volatility index sells into our sell target, we no longer look to be bearish the VIX. If we're no longer bearish the VIX, then we're counter bearish the market, blah, blah, blah. You get the point. You guys seen this way too many times. You've seen us do it way too many times, ladies and gentlemen. All for the good of the peoples. All for the good of the peoples.
All right, I'm going to go refill this coffee because why not? But also, I'm mapping off all of these little VWAPs on the downside. You could basically expect the price to sell into for obviously as long as the market goes down. But each one of these zones then becomes a counter pop level, right? And so if we counter pop, we're going to start backtracking some of the levels off the high. So now we're looking at the volume weighted average prices off the high of this move down. And so our first counter pop level would be there. And then, so yeah. But anyway, so you're kind of micro bearish down just because the VIX hit its target. SPY coming into the, levels we said. But yeah. Let me just double check this real quick, and then I'm gonna go get a coffee because I want to see if maybe. All right, yeah. So look at this view. So remember earlier, like we said, hey, the VIX has these pullback targets, blah blah blah. Why did we pick the pullback target on the VIX as the price of 1631, right? Why do we pick that? The reason we picked that is because that's the 1 hour trend, right? Now might be like, well, what's the significance of the 1 hour trend? Well, really, it's just, whether it be 1 hour or this, it does just regardless. It's just, you might be like, well, Connor, why pick that and why pick that level and blah, 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 blah. Well, here you go, right? So if you look back here. So the 1 hour chart did what? It broke down, and then here was the back test. So here, the 1 hour chart breaks up. Here's the back test. Here, the 1 hour chart breaks down, and then during the pre-market session, it back tests, and then also breaks out. So this is our back test. So it just so happens that the past couple days, there's been a lot of testing of that level. But obviously, one thing we could clearly see from this morning is that the market on the volatility index had broken out our, extend to the left,
had broken out some of our 1 hours and 30-minute trends, and as a result, that would be saying that the 1 hour and the 30-minute have entered an uptrend. Well, if they've entered an uptrend, then they're going to do what? We discussed this morning. We said, hey guys, either the market is just pretty much going to go into a long, or it's going to ultimately pull back down to here. Why? Because the market entered a 1 hour, a 30-minute, and a 15-minute uptrend. If it's going to uptrend, it has to just keep going, or it's going to have to test its breakout of the uptrend. Where's the breakout of the uptrend? Right here, 1632. So what's the market do? Breaks out into an uptrend, pulls back to test uptrend support. And that's where we're at now. And that's why we suggested watching the markets long, for the most part, up, until what? Until the VIX reaches its sell target. So we used a selling destination on the VIX to be long bias until the top on the market here. So that's how you use two different markets to that's how you use two different markets to analyze price and basically stay along the SPY while using the VIX. So, anyways, cheers. Hopefully that makes sense. Oh, shnikes. No way. That could be a good sign. That could be a good sign, ladies and gentlemen. Hold on here. Hold on. Don't want to get too ahead of myself. Hold on. No way. Let's go. I think... No way. Hold on. Wait a second. Always got to double check the incognito. As I suspected. I got ahead of myself. I was getting too excited. I was going to see if we could pick up our YouTube stream on YouTube right now, but it is not findable, as suspected. Dang it. I thought we were moving up in the world, but no. No matter how far you search, this stream is not findable. Dang it. Thought we made it.
Yes, I wish I had more to say, folks, but I do not. But I do not. So, what time we're at? 11 o'clock again. Generally, ladies and gentlemen, this is where things start to slow down. Yeah, I mean, again, yeah, so I use the system. Yeah, we use the system for individual stocks. So the main reason you don't hear me talk about individual stocks um, is just because, well, in general, they do the same thing. Every single stock, penny stock, big stock, market, they all function around the 30-minute open, high, low, close. Individual stocks are just more volatile. But also, if the stock market is in a buying signal, in a buying operation, it's more likely that your equities, Amazon, Facebook, any stock will be performing. So generally speaking, if the markets go into a buy signal, we can just assume stocks are going to perform well, right? So it's not like I even have to go look at the stocks or perform analysis on the stocks to know, that they're going to do well. They're almost always going to do well, right? Like, how often does the stock market sell off and stocks go up? Very rarely. Now, of course, there are some, but as a group, we can just group them all together and say they're probably going to perform poorly. And you'll be right, they will. And if the markets are going up, what happens to stocks? They generally go up, right? So whenever the S&P goes into a buy signal, it pretty much is the green light to go back long equities, right? So let's go look at today. Nvidia ends up going up. Google, not so much. Microsoft, not so much. UPS, not so much. AVGO, kinda. Tesla went up. UNP, no. JP Morgan, kinda. Not really. Amazon up. Meta starting to go up. Or wait, Netflix, sorry. Meta, no. AMD up. So on and so forth. Probably missed a couple in there. Or maybe I didn't. Nvidia up, Google, and so on and so forth. All right. So we have a handful that have performed okay. But I'll show it to you here real quick on these guys. So we're going to go to a 30-minute chart, and we're going to look at the 30 minutes. So so we'll run through all of them from the top down. Apple just started a buy move this morning. All right. So if you look at Apple, right? Apple's had a pretty decent day today. When did Apple start a buy move? Over the 50 SMA, the 30-minute. Ready? So we're going to go look at the 30-minute. Where's the 30-minute 50 SMA? Right there. At the price of $254.60. Let's go to the pre-market chart, and we'll go to a 1-minute. When did Apple flip positive? Right? The 50 SMA, the yellow line. So look at, ready? Here's Apple. Apple is bearish, negative. It starts to reverse, comes up. It goes to the 50 SMA. It breaks out the 50 SMA. It pulls back to it, and there's your long. So I would say Apple was a stock that entered an uptrend today. And Apple was one of the stocks that helped the stock market go up today because of its uptrend. All right. Let's go look at another one. Nvidia. Nvidia has been in an uptrend. So Nvidia started its uptrend back here when it broke the 50 SMA. Right about there. Go look at a extended trading hours chart because it happened during the pre-market or the after hours. So what ended up happening here is Nvidia traded up to its 50 SMA. And algorithms broke it out in the after hours and gapped it up. And so it started its uptrend right there. And since its uptrend, there is, Nvidia up. All right, let's go to another one. Let's look at Microsoft. 30-minute. It kind of looks down, but I don't really know. Oh, Microsoft hit support today. So Microsoft ended up hitting support. So this is the 50 SMA, right? So Microsoft entered an uptrend back here, hit support, and then now just hit support again. So let's go look at the intraday on, let's go look at the intraday here, Microsoft. Boom, right there. In 1 minute, and right there. So the low of day right here, this is the 50 SMA. Yep, so this is the back test, right? So this would be Microsoft sells off today, down to 50 SMA, bounce, 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 higher low curl. Okay. Next one, Google, 30-minute. Let's check her out. Google's been in a downtrend. When did it start a downtrend? It started its downtrend on the 30-minute back here, right there. Let's go look at the extended hours. So when did Google enter a downtrend? Right there. That's the 50 SMA. It was trading above and then broken down. So here you go. So the system works the exact same across all equities, all stocks, all things. It's probably another reason why it's so hard to find this YouTube stream on YouTube. Let's look at UPS. Oh, UPS backtesting support this morning. It had a breakout and a backtest. So where's the 50 SMA? UPS right there. And so what do we have today on UPS? You had a breakout and a backtest. So ready, watch. Where's the breakout? 50 SMA. Yellow line. Where is it? The yellow. And breakout. Pull back. Test. Okay. Let's go to LLY. Ooh, this one had a good day. LLY. This one started, was that today or was that yesterday? I don't know. But it started an uptrend here at the price of $725.53 right there. Bing, bang, boom. Extended trading hours. Where'd the uptrend start? Right at the yellow line. Here you go. Breakout, back test, bang. That would have been a sick one to buy. So, all you have to do is follow whatever stock you like and then buy when it enters an uptrend, or buy on the wait, never mind, I can't say that. Wait, no, I can't say that either. I like to participate in uptrends. So ideally, find where uptrends start, where backtests of uptrend starts, and try to involve yourself in those areas of the market. Some will work well, some won't. So what do? You have an account. You don't have to become rich. So all you gotta do is go, oh, this stock may have entered an uptrend. Here's $5. Oh, this other stock entered an uptrend. Here's $5, and here's $5, and here's $5. And I'm exaggerating, I'm joking. But the point being is that at any moment on any given day of the week, a stock could be entering an uptrend, going into a great play. You don't know if it's going to be great. You don't know if it's going to be crap. But what you do know is it's potentially entering an uptrend. Now, if you diversify your bets across multiple uptrends, you will get in on a good uptrend, and you will have a poor one. So you're diversifying your bets across multiple uptrend starts of different equities and markets. So you're getting in on trend, and then you're diversifying your bets, right? That's ideally what you can do with individual stocks, right? So I have a handful of stocks here. They're all the big major market cap stocks, right? And so at any point, if I find one that goes into an uptrend on a day, like if this was today, and I saw TSM going into an uptrend at that moment, I would be like, oh, you know what? Actually, this stock is entering an uptrend. Like maybe I'll grab a little bit. Maybe I'll try to grab some on the dip. Do I know if it's going to perform the best? No, but I know there's potential for an uptrend start. So maybe I take 1-2% of my account and I put it on TSM today. Nope, next thing you know, TSM's up 10%, whatever, right? And you do that over and over and over. That's the idea. Now, is it that easy? Obviously not. But that's how you could easily... So what I'm basically showing you is how to find when stocks are going to blow up every single day without using a scanner. Right? It's the same strategy across every single equity and every single market, no matter what. It doesn't change. And this is going to go on for the end of time, most likely. Why?
because SMA calculations are just that. They take previous price, current price, and they give you the simple moving average calculation. It's not like some random kid on YouTube going, hey, look at this pattern, right? Because everyone sees a pattern differently. A pattern doesn't always form the same, et cetera, et cetera, et cetera. But what is always the same? What is always constant? The simple moving average calculation. So this will go on for the end of time, okay? Yeah, so that's... What about buying at support after an uptrend's been confirmed? I mean, yeah, that's like trading, that's investing 101, right? When something goes into an uptrend, look for a back test. That's the same case with like SMAs, and so on and so forth. So I do look at individual stocks, but I mean, you guys see me looking at markets more often than anything. But that's also because it's a little easier for me to predict the overall market than it is individual stocks. Because individual stocks can be much more easily manipulated because they're just one stock. Someone wants to manipulate the price of the S&P 500, they're effectively manipulating the price of the entire 500 equities, which they still do. But you see what I'm saying is it's easier. The ebb and flow of a market is a little bit more almost like saturated, if you will. The market of TSM, it's just TSM. That is it, right? It'd be much more easy to manipulate the mind of one individual than it would for me to go to, a party and manipulate the mind of 100 like-minded individuals, right? So when you're dealing with individual stocks, again, you have to understand that the volatility and the characteristic aspect is a little less predictable in that regard. Yeah. That's like, yeah, and easy today, there was no penny stock I liked. I didn't see anything. And there could easily be something that popped up now that I've missed, but yeah, so for me, I'm just still riding along the UPRO. So I have position on UPRO, just riding UPRO long, because again, the market is in a buy move. So if we look at the market again, my initial long was here, sold some here, bought some more here, sold some here, and then I bought some more and bought some more. And now I'm just still riding that up. And I'll flip the bearish when we go into a downtrend. Yeah. Bitcoin. Oh, nice. Bitcoin going up a little more there. I love it. Love it, love it, love it. So yeah. That's that. So market's going up. I'm assuming if we look at the VIX, it's coming down into our further targets. Yep. So now we're down into, well, we're still in the same area as always. So this is where it gets a little interesting, guys, because, well, and when I say interesting, that's not entirely true, but all right, watch this. Ready? All right, so look at these two charts here that I'm zooming in on, which you can't really see that much, but so look at where the 1 hour is. You see here, see how the 1 hour is right where we're at? So I'm going to put a line there, right? That's right, we're at the 1 hour, okay? Where's the 30 minute? The 30 minute's just below that, right here at 1622. So we have a breakdown of arguably 10 to 12 cents coming on the VIX if, again, the market wants to break down the 1 hour. If we break down the 1 hour and continue sliding, our next destination would only be 1622. Now you might be like, oh, that's only 10 cents. Yeah, well, guess what? I'm not the one who makes the SMA calculation trend. That's the market. The market right now is positioned in a way that if the 1 hour breaks down, we only have a 10-cent selling target and move to the 30 minute, which is 1621 or 1620s, right? Now, someone on the internet might be like, oh, I mean, it's not that hard to, predict 10 cents down. It's like, you're right, it's not. But we're not predicting 10 cents down. We're predicting movement from SMA calculation 1 to SMA calculation 2. And it just so happens that the price difference is 10 cents. Some days it's 30. Some days it could be $1. that just depends on how the market is positioned. And right now, it's only 10 cents. So we are still coming into and still trading at the 1 hour. So right now, this is the 1 hour VIX level, right? And then this will be the 30 minutes. So this is 1 hour, 1 hour. And this is the 30 minute. Oh, man. But yeah, this morning I just didn't really come across any penny stocks. And again, I usually look when I wake up in the morning, and if one of them is at one of the levels I like, then I would trade it. Otherwise, no. And when I looked this morning, there really just wasn't. Wait, what about this one? Was that new, or maybe it was? Oh no, that's right. Yeah, there's just nothing that really. Well, there's this one, but that one started popping up later, so I wasn't looking at that time. That's the way it would seem. Huh. Yeah, I just wasn't able to find anything in the real time that looked favorable for low risk trading, so I just kind of avoided it. And I can see there's a couple other that popped up that I just kind of missed. But, let's see, like AIAH, missed that one. That was easy. I was kind of looking at that one too. Made that mistake. Dang it. Whatever. Got to put a little bit more time into those. Again, when I'm streaming, I'm always talking about, what's going on with the market. But maybe I got to take a little bit more time. Just kind of keep looking around for some things. All right, I'm going to be back. Go get a coffee. I said that like an hour ago. Okay, we're back. Whew.
Excuse me. All right, we've reached that moment in the stream where things are starting to slow down. Also, obviously, you guys probably see if you're looking at the screen, we put on this 1 minute micro pullback level because obviously previous established low. View at pullback. Ding, ding, ding. Sorry, I've used my brain for a lot of hours a day on high intensity stuff. And again, your brain can only handle so many hours of essentially high focus work like that without getting a little tired. So we're going to use this moment to kind of chill, relax, and I think I'm going to play some Slither.io. I don't know about you guys, but growing up, my niece and my nephew loved this game, and I really loved playing it with them while they lived at my house. J. Jerome. So, we're going to do that, but, so, hold on 1 second. Window capture, yep. Yeah, I don't know if you guys have ever played this game, but it is lit. Slither. Again, guys, I literally just got a pretty small position on the SPY or UPRO. So just pretty much as far as like the system goes, it's the only thing I got going on. I was just sitting on a small long position up on the market, so I don't really have a whole lot to do for the moment. Most of the cool stuff as far as the market is already completed for the day as far as like volatility goes. And a lot of the targets that we would normally look for kind of the morning have already been achieved. So it's kind of that slow period where you just kind of hang out and play some Slither.io. Or go get some lunch. So I'm probably just gonna like pretty much play this game for a hot minute. And just hang out. Do 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 do. I don't know if you guys have ever played this game. I find it pretty fun. It's very, very pointless. You just go around and collect orbs until
until you run into somebody else. Oh, see, he tried to get me, but you're not gonna. Nah, son. Oh, that's a big guy. He's a biggie. Oh, but that guy pretty much got them all. Ah, dang it. Sorry if this is boring for you, but I'm actually having quite a lot of fun right now. What's Bitcoin doing? Bitcoin 117,300 still. Not bad. Be nice to see it going up more. It kind of looks like, I don't know, it looks like my YouTube stream's kind of glitching out. I don't know. Does it look okay, or is it starting to have some like random buffering issues randomly? Nice. That was lame. Oh, that's right, baby. Hopefully our stream's okay. Kind of looks like it's gotten completely knocked offline. I don't know. Maybe it's Slither.io, but it shouldn't be. So I'm not really sure. Yeah, that's good. I was to say for a second, I was like, man, our stream is just starting to do some weird stuff, but it's okay. Let's go, baby. Come on, Slither. Again, guys, like, there's really not a whole lot to say here. We got Bitcoin 117,000 just hanging out. The S&P 500 is obviously in a buying operation, so you're not supposed to be swing short. It's supposed to be macro long. The government may or may not be shutting down. Who really knows what that's going to do? Oh, that would have been nice. Dang, I'm already up to 3,300. Nice. I mean, I know I haven't thrown any targets on the screen as of late. That's only because I'm too busy slithering right now. But you guys have watched me repeat the process of how to add anchors to the screen many, many times. So you guys should be pretty well equipped on getting some of those targets for the short term as far as 1 minutes, 5 minutes, things like that. Good morning, Oliver. How's it going? We're just kind of hanging out. I'm just playing this Slither.io game real quick because not a whole lot to do at this point. Well, I mean, there's always something to do, but I figured we already did a pretty good job today. Kept most people on the macro swing long. Couple little intraday moves there. So today's been a pretty good day overall. So I figure we'll take a little mental break and just throw down some Slither.io. Our snake's name is, what is it, Jay Powell. It's Jerome Powell Daddy. Oh, that guy almost got me. Dang it, just got. I was trying to read your comment and couldn't do them both. Alright, well, that was fun. Little Slither.io. I like that game. That game's fun. Well, we will go take a peek back over here. Doesn't really look like a whole lot's happening here, folks. Bitcoin just hanging out, going up. SPX just chilling, going up. But maybe something else is going on. I don't know. Let's see. Interesting market today. Apple. So I'm actually going to, well, let's kind of run through all these guys. Ooh, AVGO. AVGO is an interesting stock. AVGO is right at the 50 SMA, so this one is something where you have to determine. So like this is it. We have to look at AVGO in this moment and be able to determine, is this a bearish back test where we're getting ready to get thrown down? Or is this where the market may transition over the 50 and start a buy move, right? So that's what you try to figure out right there. So the only way you can do that is by looking at momentum indicators, if you will. Give you some edge there. What's the market doing? Maybe you look to see if there's some news. Maybe there's something. And that's another thing. News can be important for equities, though, because that deliberately speaks to, an equity. But so there is importance to news. I sometimes make it sound irrelevant, but generally when it comes to like the stock market, it's kind of irrelevant, because we're just going to move that how we want with buy and sell moves.
But yeah, so AVGO is kind of interesting because now it's coming into that 50 SMA. Not that I necessarily look at the stock all day long or anything like that, but that would be coming into 50 SMA right now. So this would be basically a stock to watch for potential uptrend starts. And remember with any stock starting a potential uptrend, just know that it can. That's the kind of the annoying part about this particular system is that anything that could be starting an uptrend can also just be the back test of resistance and coming down. So that's always the thing. It's the over under. You can also have longs take off, fall apart, come back down too. So you never know fully, but again, AVGO is another interesting stock here today because it's, coming into that price point. Or wait, I need to go back to this time frame. Regular trading. Yeah, it's coming back into that 50 SMA. So I'm gonna keep tabs on UNP. UNP is another kind of interesting one. UNP just came down into 30-minute over-under trend support here today. So this one's kind of interesting because it's right on the over-under. So pretty much UNP either continues its uptrend from here or it can arguably enter a downtrend, right? So that's what the computers are doing right now. So far, they're holding UNP above trend and not allowing the downtrend to take place for the moment. Market's still looking good. Our, essentially swing up market is still intact. Things look okay there. Actually looks pretty strong. That's just simply looking at the candlesticks. I'm not actually looking at momentum indicators or anything. Oh yeah, I gotta go. I keep forgetting this. I'm meaning to just go through this really quickly, but I'm clearly not. Amazon, another kind of interesting one. Amazon is right on. So Amazon is basically fighting the over under. It's still negative, hasn't gone positive yet. But that could be one to keep. This would be one to keep tabs on for, for a long, if you will. I mean, you can play it however you want. I mean, it's bearish below right now, but Netflix is already bearish. Meta is already bearish. AMD kind of flirting. Honeywell's up. So out of those few, the only ones that are at levels right now are UNP and AVGO. These are the only two stocks right now currently at levels that may do something. ABGO, baby! Old Pumper Magoo. Again, I don't, sometimes I just say random things, so, don't let my random intrusive thoughts make you think that something is something crazy, okay? Sometimes I just say random stuff. Oh, by the way, I haven't updated this list in a while, but generally the list you see on my screen is of the largest market cap stocks. I usually try to keep the largest market cap stocks here, but some of them may have changed since then. Oh, actually, here's another good one for you guys. I haven't gone over this in a long time, but this is something you guys might like. Which is I'm actually gonna bring it up on this guy here. So Sector Spider. This is a quick website where you can go into a lot of your big ETFs and markets and essentially just find out what's moving. That's really the objective of these things, is to see what's moving. So I have actually used this in a little bit, but let's see. They've changed the website over a little bit. View full sector tracker. That's probably it. Yes. Okay. So now we're looking under healthcare. Healthcare was the biggest mover today, next to communication services. So one of two things here. So knowing that healthcare was one of the bigger movers today, along with, well, no, I'm not considering communication services right now, but if healthcare is one of the biggest movers today, that also tells me that we probably, like, as far as the penny stocks today, a lot of times you would have saw like penny stock healthcare increasing. So that's something also to consider. That a lot of times, whatever like the biggest market moving on the day, then your penny stocks are, a lot of times you'll see like healthcare penny stocks popped up today. But anyway, so we know that healthcare XLV is of, so XLV healthcare market sector had the biggest gainers, and of those, Moderna was the biggest. So we could go today and look at Moderna. So we'll go look mRNA. All right. So we're going to go take a peek at mRNA today. And sure enough, it had a really good move. Now let's just see in relationship where it is to the 50 SMA. So it did in fact start an uptrend just yesterday. So like this is one that started an uptrend just yesterday, and it's putting on some of the biggest gains. Now the reason you look at this list, just in general, is to know where, dependent, like where is the momentum in the sectors for the markets today. So this is diving a little deeper than just market internals. Earlier you saw me talk about market internals, and yes, this is the NASDAQ, and this is the NYSE, and this is the S&P, but now what we're looking at is we're looking into the, spider ETFs, specific sector oriented, in where is that momentum in that specific sector today. And right now it's in mRNA, right? Or it has been today. Now, at the beginning of the day and in the open, did you know that mRNA was going to be an 8% bang, a 9% winner today within the healthcare market? Like, no, you didn't. Is there ways to know that? Maybe. Do I know it? No. Do I wish I did? Yeah, but I don't. But what we do know is that within the healthcare market, mRNA is picking up. So, again, this is kind of one of those ways where you can quickly jump through the market and see where momentum can be at. Is trying to kind of look through the sectors and know what's got momentum today, what doesn't, and so on and so forth. And obviously you can't know that exactly at the open. It's going to take some time. But, something else that actually I'm just now thinking about is if I look at XLV, because if XLV, I might have done this in the past, but if XLV is of the biggest gainers, then let's see what the XLV ETF is looking like. So that's another thing too, is if we look at XLV, we know that XLV started into a buying operation
a couple days ago. So now we're seeing the stocks within the XLV market go into buying operations. So that makes sense, right? So if we look at mRNA, we would assume, right, it's probably in a long move. And then if we go to REGN, which is the next one, REGN just started a buy signal the other day. TMO started a buy signal the other day. SRL or CRL buy signal the other day. LLY. So you can see how these are all starting. Oh, there we go. There's E-Lily. We just went over that one. But so you can see how all of those patterns within all of these stocks. Pfizer, look at Pfizer, pretty much the same. And there might be some like news for the healthcare markets that I don't understand, but you can see how the patterning and the formation is pretty much the exact same on all of these stocks. They all started in an uptrend pretty much the same time, and XLV, the parent ETF, pretty much has the exact same pattern. So that's something you can obviously do and look at and have fun with. Oh, Schnikes, yeah, my bad. I do have that screen covered still. Hold up. Yeah, so pretty much what I just did was take all of the stocks that are on that list under this screen, healthcare holdings, and we just went through all of them. So if you look at, again, XLV, look at XLV. XLV to start a buy move, buy signal, etc. Yeah. Yeah, so there's a pattern in XLV, mRNA, all right, REGN, TMO, CRL, LLY, PFE, etc. So that's that. But what else we got? We have the worst market today was communication services. So it would be fun to look at XLC. So if we look at XLC, communication services, we know that XLC started a downtrend today. So we can see XLC drop below the price of $118, which would dictate uptrend, downtrend momentum. That happened today, this morning, below, in the pre-market session. But either way, so XLC entered a downtrend today. And of the consumer or the communication services today, why is that being so weird? Or wait, no, I'm just being a silly goose. There we go. And of those, the worst would be AT&T and T-Mobile. So T and Google. Excuse me, my throat. So if we go look at a couple of the stocks in the communication services sector, let's take a look. Regular trading hours. So we'll see that TMUS started a downtrend just today. Let's take a look at AT&T. AT&T didn't start a downtrend today, but it hit its downtrend resistance yesterday and then rejected overnight. Google's been in a downtrend. It's kind of far away. TTWO back tested its support today. Disney's just up. WBD kind of interesting. WBD is kind of on its overrunner. Do you depend on the SPY for market direction? Yes. Well, yes and no. Because market direction would be the SPY. Or maybe QQQ. Or maybe the Dow. SPX. Hold on real quick. I will get back to that, Mr. Entertainment. I just want to bring down or move this over, and I want to bring down the screen from above, the volatility index, because obviously you guys know, what did we talk about? We talked about breaking the 1 hour down and then going to the 30 minutes. So what did we just see here? We saw what? The breakdown of the 1 hour and now moving down to the 30 minute. Okay, so again, that's all completing, right? So that's Not that that's something super amazing, but again, that's just teaching the movement of markets through SMA calculations and what algorithms look for. All right. So that's complete. That sell target, at least for the VIX that we announced in the pre-market session, essentially. All right, so back to your question. The SPY would be the market. SPX would be the market. So we don't use SPY. Well, I mean, we do use SPY to predict SPY, but I guess your question is probably more like, yes, we look at the SPY, and if the SPY is performing well, then we kind of assume stocks are probably performing well, right? Or if I was going to buy an individual stock, I would like to probably see the market performing well, because that might give me some more confidence. Doesn't always mean that if the market's going up, my stock is going up. That's not always the case, but yeah, I mean, we use the SPY to map off levels on the market to dictate the market. So maybe this is probably better answering your question right now. Is yes, I look at the S&P 500 to determine if I want to be bullish on the market. So right now we are bullish the market, and we have been bullish the stock market since the end of day Friday last week. Not that we haven't been bullish the market over the past year or a couple months. It just means that we were offered a buying operation signal at the end of the day Friday. I will show that to you now. I'm going to put a vertical line on this chart. Where I put the vertical line on the chart identifies where the market started to transition above the SMA, the red SMA, which then means buying operation, right? Or look to be bias long. So we are from this, you will hear me say it in many ways, but here would be long bias, bullish, trend positive, bullish trend, buy program, buy algo, market shift, etc. Many different words for it, but that's pretty much what that is. So at the end of the day, Friday, we are bullish transition, long bias, bullish, trend positive, market, bullish trend, buy program, buy algorithm, market shift. So now we're long. Okay? And that is all derived by one simple moving average on the SPY or SPX. That's it. We're not looking at any news. We're not watching CNBC, Fox News, CNN. We are disconnected from news. We're not reading Seeking Alpha. We're not going on someone's Twitter page. We're just simply looking at the market and following one trend. And if market price is above said one trend, we are going to try to flip markets. Does that answer your question? There's more that I could cover, but we use the volatility index for market direction, right? Like right now, this is actually perfect, right? So look at ready. See how on this screen here with the VIX we have the 1 hour and the 30 minute. If you go back in the stream a little bit, which I'm not saying you really need to, but if you did, just to fact check what I'm saying, we had said, hey guys, when the VIX breaks down the 1 hour, we're going to sell it to the 30 minute. And while we're doing that, the market is going to go higher. So we are long biased the market, and we're also using the VIX market. We're using the selling destination targets on the VIX to help us be more, so call it conviction, in our long thesis, right? So for example, the smiley face. Ready? I'm going to do this without putting a bunch of well, this is random, but this guy, the smiley face. Ready? That is where the market started going positive. All right? So we're long biased the market because the trend is changing to positive on the market. Okay? And now I'm going to add a new smiley face. And this new, actually, yeah, this new, well, let's make it different than the smiley face so no one gets confused. We're going to put a little party face. This little party face, like right there. I'll make it zoom in a little bit to this little guy, like right here. This one, we'll just call it like right, I'm trying to make it bigger, right there. That little smiley face, right? That little smiley face is that little smiley face was the 1 hour to 30-minute breakdown in the VIX. So the first smiley face is we're long the market because the market's going positive. Then the little party faces were in this moment looking for the markets kind of to keep pushing long because we're getting signals on the VIX that it's breaking down the 1 hour, so it's going to sell to the 30 minutes. So there's a whole new reason for the market to be long 10 minutes ago, right? So there could be signals generated on the S&P 500 to be long. And then 3 days later, like today, we could be in real time witnessing, seeing, and predicting there will be a breakdown on the VIX. And as a result, that VIX catalyst will be the reason for markets to go long right now. Right? The markets aren't going long in this exact moment because of the buy signal that started 3 days ago. We were long the markets 3 days ago because of the trend going positive. Now we're furthering markets long today because of many reasons, one of which being the VIX breaking down right now and the VIX going down to our sell targets. Right? So there's a bunch of different ways how you can read markets, but to answer your question, that's what's going on. We are using the SPY market to read the SPY market, the VIX market to read the SPY market. Sometimes we're using the SPY market to read the VIX market. We're using the S&P to read equities. We're using equities to read the SPY. All of these things work together. It's really just one organism, and they're all connected and have their own characteristics, and so on and so forth. There is a target on the SPY that I didn't mention earlier because it kind of sounded crazy, but we could be getting close to it. Kind of. We do have a target on the SPY up to $667.88. I didn't really think it was going to happen today, but it might. So if you do see the price at $667.88, just know there's reasons for it to be there, or even tomorrow. Q updates today as well, along with monthly and weekly. Does it? I guess I don't really know for sure. But if there's a new weekly candle coming in. I actually don't know when candles. I have to see. I use that for like Bitcoin and stuff like that. But yeah. Also, AVGO, ladies and gentlemen, boys and girls. Sorry, AVGO is doing very well since the recommendation, which was really just, hey, watch this because it's coming into an area of interest where we can start an uptrend. The vertical line. That is when AVGO crossed into positive territory. Whether or not it trends positive, I and you have no control over, but it's coming into that level. So just a heads up there, ladies and gentlemen. I just wanted you guys to look at it now after we talked about it, just so you can kind of see it with your own eyes in real time, right? You see, where's the 50 SMA? It's the red line, and yellow line. And now the vertical line, again, is overlapping the exact 1 minute that we started to cross above it. Okay? This is where the market on AVGO started to transition above the 50 SMA, which is essentially going from negative to positive. All right. So, I just don't know JGM. When I say I don't know, it's I don't know the exact day, the exact like Bitcoin on TradingView updates weekly candles on Sunday at 8 p.m. I don't actually know when they do it on. I don't know if it goes if they print the new ones on Monday. I guess I've never really paid attention to that for some reason. But I will now. But yeah, so I just don't know when they're gonna print. Oh well, obviously today's the 1st, so it's a new monthly candle, duh. But sometimes platforms are a little different though on weekly candles. Like weekly candles, sometimes they come in on Monday. TradingView prints them on Sunday, so that's something I haven't really actually paid attention to that much. And then again, crypto's a little different than equities, but nonetheless. We do see movement when new candles are made. I don't have enough data on that to say if it's just going to cause the market to rally and rip. And I don't necessarily think too much like that. I usually look at kind of what I showed you there just a little bit ago, which is the SPX trend on the 30-minute, which pretty much is that we started an uptrend. All right, so we started an uptrend. Now we're into a new month. Does new month and new money come in? All this again. There's a million different things we could think about, but at the end of the day, I'm just thinking that we're in an uptrend. So obviously we're long bias, and we're gonna stay long bias markets, right? Until we go into a downtrend, or until the VIX arguably signals us to change that. What a beautiful day it has been here, ladies and gentlemen. I mean, bruh. The market is rippy. Hitting the rippy McSticky. But yeah, new weekly candles are important. Here's another one for you. Like if you think, well, this isn't a great example, but if maybe I'm gonna say like, if for example, if like a golden pocket of a week hasn't been tested, a new weekly candle can open and sell off to test the range of the previous week. But yeah, there's quite a bit of things you can look at. But yeah, for example, TradingView, Sunday night, 8 p.m., new weekly candle. When you'd be like, well, why wouldn't it start on Monday? Or why wouldn't it start the beginning of Sunday? For whatever reason, on Bitcoin, Bitstamp, 8 p.m., Sunday, new candle. I'm like, okay. All right, Petey, have a good one, brother. Yeah, so markets are just getting juiced up. That's all. Hitting the gas. Because we're in a buy signal. So, essentially where the smiley face is at now, that's when we were last long biased the market for trend up. Then the smiley face here is when we transition to being bearish the market down or neutral. Then where the smiley face is at now is when we transition back to being bullish the market. And here we are now, up. Did I know the markets would go up, pull back, go up, pull back, and then go up in this pattern exactly? No. We just know that the uptrend is more favorable. And so we will look for higher low, higher high, higher low, higher high formation as long as we're above the SMA trend, which we are. Um. Oh my gosh, the market is absolutely pumping. AVGO is now up to 336 a share since the uptrend start. That's pretty crazy. But also, again, look at the market. The market's just absolutely pumping. So what do you expect's going to happen? Markets are squeezing the living daylights out of shorts right now. That's the beautiful thing, you know? That is a beautiful thing, is that last week the market was getting just tanked. People were bearish. And now we're just rallying it up long. And actually, you can kind of see like a bull flag pattern here if you look at the market. I'm not saying that I use these things. I only use them in hindsight, to be honest. Which is that you can kind of see it. Ready? Look at market turns positive over the 50, and then you create a flag over the 50. And then there's your flag pattern break. All right. So it's not that we're looking for that flag pattern. It just so happened that the bullish flag pattern happened after the market went from bullish or bearish to bullish. Bullish flag breakout, right? Oh my lord, looky, looky. ABGO. Look at that pump, dude. Look at the absolute pumper magoo. Oh, by the way, we did actually hit a pretty good target for the initial long there, because, yeah. In this case, been there. Here. another one. NRG. NRG right at the uptrend over under. So it'll be interesting to see how this one maybe plays out. Oh, wait, what? That guy to do. V. And plug already into a decent uptrend. BTU already into a decent uptrend, and LAC already kind of in a decent uptrend. So late, but OKLO is not late. So OKLO is one that I would watch. Yep, so that's the one I would pick to follow. Only because it could be at the, not that other ones don't perform, I'm just saying it's right at the over-under right now, so this one's got some chance. Again, market is absolutely pumping, ladies and gentlemen. All right, so UNP, remember we said we'd follow this one a little bit. Who knows what plays nice. So UNP just started to break down. It's 50 SMA. A little, when I say break down, I mean it's just price starting to come below. But let's just see, where is that at? So UNP arguably at the start of getting bearish, right here. Alt V. So there's UNP, vertical line right there. That's essentially when it started to break down, 50 SMA. SPY 30-minute. Oh, SPY all the way back to the all-time high. just kidding. I'm just making random noises.
The YouTube algos are pumping today. Alright, well, I think we'll probably end it there for the day. Again, another perfect stream. No complaints here. Kept everybody on the right side of the trend, as we normally do. Kept all of you guys on macro long. Never said to be swing short. Never said to be extremely bearish market. So again, we have essentially stayed on the right side of the trend all week long. So cheers to that. And yes, sir. That being said, I'll catch you guys back tomorrow morning. Make sure to share the stream to as many places as possible. We would appreciate that. Cheers. Have a good one.